going with palm oil prices then, and reports indicate that Indian buyers have moved early to secure sizable soybean oil supplies for the 4 months leading up to July 2026. Industry executives say that traders have locked in over 150,000 tons of South American soybean oil for each month from April to July next year, anticipating a rise in rival palm oil prices. For now, soy oil continues to trade at a $20 to $30 per ton discount as compared to palm oil prices during that window. To break this down for us and what this means for global edible oil market, we are now joined by Mr. Sandeep Bhan, CEO of SD Godrej International Trading, now joining us. Mr. Bhan, afternoon, and thank you so much for joining us today. How do you view the outlook when it comes to soy oil and palm oil prices, with Indian traders now locking in purchases for 6 months ahead? How do you view this, and how unusual is this trade in the edible oil market?
See, thanks for having me. It's actually not a surprising thing because India is a very price-sensitive market. And like you rightly said, forward months, soybean oil is at a discount to palm oil close to $20 to $30 cheaper. So that's where the Indian traders or Indian refiners have bought forwards cheaper soybean oil. And palm oil is cheaper in the nearby months with soybean oil premium, and they are buying nearby palm oil forwards soybean oil, mainly because of price competitiveness in each period.
Okay, and traders are also expecting palm oil prices to rise on account of Indonesia's plans to blend more palm oil into biofuel. How do you view this and its impact on global palm oil prices?
This has been an ongoing case. Indonesia is going to implement B50, which is expected to be in the second half of next year. That is going to have an impact on the global supply chain of palm oil. B50 is expected to take close to 5 million tons of crude palm oil from the system into the biofuel.
Okay, and how have demand trends been from India when it comes to import of palm oil from the global market? How has that trend been over the last few months?
See, for the December shipment, India is buying continuously. It's mainly because soybean oil is very expensive, sunflower oil is extremely expensive. Then the nearest available option is palm oil because it's trading close to $100 discount against soybean oil and $200 discount to sunflower oil. That's why India is nearby buying palm oil. December shipments are going to be quite good for India.
Okay, so December shipments are going to be good for India. That's the word coming in. But since we were making the point of how Indian traders have gone ahead and booked their shipments 6 months in advance, if you can tell us what kind of risks do these refiners face with such early commitments when it comes to currency volatility, weather risk in South America, or any kind of policy changes that could come in?
See, the prices are currently at its lowest. At these prices, there is unlikely they will face the risk of anything sharp downside in the markets. I think this is a good buy.
It's a good buy, and you don't expect prices to fall. And if at all they were to move, they will only be in the upward direction. Am I getting you right?
Absolutely.
Okay, and what does this mean for India's dependence when it comes to palm oil and soybean imports? We are trying to rely on imports. How do you see that trend shaping up going forward?
See, this is in last few years, we are seeing a continuous shift from the Indian importers. Basically, whichever is the cheapest oil, they will go for it. If it is soybean oil, they buy more soybean oil. If it is palm oil, they go for palm oil. Imports will grow, but the product profile of imports will keep on switching between soybean oil and palm oil.
Okay, so that's the view coming in on soybean oil and palm oil. Thank you, Mr. Bhan, for taking your time out and joining us here on ET Now. But shifting